Hello everyone and welcome to another video blog series. My name is Bo Thibodeau. I am a financial advisor. As I record this, we're on the last trading day of the first quarter for 2018. It is March 29th, 2018. As I record this, the S&P 500 is down about 3.4, 3.5% for the quarter, and the Dow is down about 4.9, almost 5% for the quarter. There's a very good chance that we could have a down quarter, depending upon what the trading day does today. Even if there is a rally, I don't know if it will be a large enough rally to erase all the negative losses that we have experienced this quarter. This has been a very interesting quarter in regards to the market. We have seen some of the largest single day losses, point-wise in the Dow. Doesn't necessarily equate to the largest percentage drop in a day, but we've had some massive point drops with the Dow. A lot of this still is attributed to the tariff announcement a few weeks back and the fear of trade wars. Some of this is attributed to the back in February where we had those few days where the market was going really crazy. It was a testament to the rising fear of inflation. And the fear was that if inflation keeps rising, that there may be more rate hikes possible than what's been predicted. And that kind of got the market in a tizzy. Another thing that's kind of closed out the quarter is the Facebook issue. Facebook has now found themselves in a privacy scandal, to say the least. And the market has not liked that. Facebook stocks have taken a hit substantially. With the concerns of privacy. Now, one of the positives that I have noticed this quarter compared to last year is you're starting to see some of the non-market investment yields and rates starting to come up to some very attractive figures. Prime example, CD rates, brokered CD rates are starting to look very attractive. So are some of the fixed annuity rates. So you're starting to see some of those, numbers start to creep back up that are very attractive for those investors that do not want to expose themselves to the market. Now, when you get your account statements in the next few weeks and you're not happy with the significant losses that you may or may not have, or if you're not happy with the performance that you think you should be receiving or that you should be expecting, please, schedule a time to go visit with your advisor. If you're not working with an advisor and you would like some help, come see me. I'd be more than happy to work with you. But like I always say, your investment should work for you. You should have investments that you're comfortable with, in periods like we have now, where the market has been very volatile. If when you get your statement, you're not comfortable with those losses, seek out your advisor. Maybe you're too aggressive for your liking, or now that we've had some volatility, you're really starting to see that you might be a little bit too aggressive and not as comfortable with the investments you have as you originally thought. That is fine. Work with an advisor, make sure you're diversified. Again, I always say investing is a lot of it's emotion. It's been a very emotional ride this quarter with the market. We've seen some highs. We've seen some very down low days. And how much can you really stomach? Those of you that are at close to retirement age, watch your 401k statements. Look at your IRA statements. If you're not happy with the return or this market swing has really concerned you, speak to your advisor. That is your retirement money. You do not want to have a lot of volatility when you're close to retirement. You may be depending upon that money in the future to live off of. Who knows what the second quarter and the rest of 2018 will bring? We have seen some volatility. Don't be surprised if it sticks around for a little bit. It seems like these massive market swings, I hate to say this, are starting to become the norm. We used to not see 600, 700 point drops in a day. We've seen that a few times this quarter already. So 2018 has been a very interesting quarter to say the least. One thing people are starting to see is that we've had some very good economic numbers come out, but the market did not respond the way people thought they would. And again, that goes back to that inflation number. So one thing to keep in mind is, even though the economic numbers may come out and they may seem like they're really good numbers, if the market reacts negatively, there's a reason for that. That goes back to the rate hikes. So again, 2018 has been a very interesting year so far as the markets. Again, just to recap, finally starting to see some non-market investments such as CDs, brokerage CDs, fixed annuities, rates starting to come up to some attractive levels. Again, the Dow is slated to finish down for the quarter, so is the S&P. Again, if you are uncomfortable, go see your advisor and talk about your strategy so you won't have these feelings in the future. Till next time, thanks for watching. Have a great day. See you later.